Ever wondered which stocks are catching the eyes of U.S. lawmakers? Let's delve into the latest investment moves from Capitol Hill. Politicians often seem to have an uncanny knack for market timing. Curious about their recent acquisitions and whether aligning your investments accordingly is a wise move? Stay tuned, some of these choices might just surprise you. Let's begin with AbbVie, a global biopharmaceutical company recently added to the portfolio of Representative Jared Moskowitz. AbbVie focuses on developing innovative therapies across immunology, oncology, neuroscience, and aesthetics. The company is renowned for blockbuster drugs like Humira, Skyrizi, and Rinvoq, which have significantly bolstered its revenue streams. With Humira facing biosimilar competition, AbbVie has strategically positioned Skyrizi and Rinvoq to capture market share, potentially surpassing Humira's peak sales. Notably, AbbVie has a strong track record of rewarding shareholders, boasting over 50 years of consecutive dividend increases with an attractive yield of approximately 3.6%. Beyond its established products, AbbVie's diversified drug portfolio in oncology and neuroscience continues to drive revenue, ensuring a balanced reliance across its offerings. The company's robust pipeline, filled with multiple Phase 3 studies and recent acquisitions, suggests that AbbVie is well-positioned for future innovation and growth. Another intriguing investment comes from Representative Victoria Spartz, who recently purchased shares of Simon Property Group. As the largest retail real estate investment trust in the United States, Simon Property Group specializes in owning, managing, and developing malls, premium outlets, and lifestyle centers. Its portfolio includes high-end shopping destinations like the Forum Shops at Caesars and premium outlet malls worldwide. The company generates revenue through rental income, tenant services, and retail partnerships. While the economic recovery is underway, caution remains around consumer spending and the full return to physical retail, which could impact Simon Property Group's revenue growth. Additionally, fluctuating interest rates pose a challenge, as rising borrowing costs could pressure financials, particularly when refinancing debt or funding new projects. The company's dividend growth has also been relatively modest, suggesting a more conservative approach to shareholder returns amid uncertain retail demand. As malls evolve into mixed-use spaces, the challenge lies in how effectively Simon Property Group can adapt to these changes. While occupancy rates have improved, they remain below pre-pandemic levels in certain areas, indicating that the full recovery of foot traffic and tenant stability is not yet guaranteed. These investment moves by members of Congress offer a glimpse into sectors they find promising. However, it's essential to conduct thorough research and consider your financial goals before making any investment decisions. Representative Jared Moskowitz has recently invested in McKesson Corporation, a global leader in healthcare supply chain management. McKesson plays a pivotal role in pharmaceutical distribution, medical supplies, and technology solutions for healthcare providers, ensuring the efficient delivery of medications and services to hospitals, pharmacies, and clinics. The company has been strategically expanding into oncology and biopharma services, as evidenced by its agreement to acquire a controlling interest in Prism Vision Holdings, a premier provider of ophthalmology and retina management services. This acquisition aims to strengthen McKesson's specialty care offerings and position it for long-term growth in the healthcare sector. Financially, McKesson has demonstrated resilience in a volatile market. In the fiscal year ending March 31, 2024, the company reported consolidated revenues of $309 billion, marking a 12% increase from the previous year. Despite some recent earnings misses, McKesson raised its full-year earnings guidance, reflecting confidence in its financial stability. The company has also consistently increased its dividend, with a recent 15% hike demonstrating a commitment to shareholder returns. With a dominant market share in drug distribution, McKesson benefits from pricing leverage and cost efficiencies, solidifying its competitive edge in a highly consolidated industry. Analysts remain optimistic about the stock, with positive evaluations indicating substantial upside potential. On the Republican side, Representative Byron Donalds has made notable investments, including in First Citizens Bank shares. Headquartered in Raleigh, North Carolina, First Citizens is a regional U.S. bank known for its conservative management and steady growth. The bank offers personal and commercial banking, wealth management, and lending solutions. It recently made headlines by acquiring Silicon Valley Bank after its collapse, a strategic move that significantly expanded First Citizens' asset base and geographic footprint. This acquisition provided the bank with new opportunities in the tech and innovation sectors, while stabilizing its overall market position. Over the last 3 years, First Citizens' stock price has surged by more than 142%, outperforming many of its peers. Strong leadership, guided by the holding family for 3 generations, has ensured long-term strategic planning and stability. The bank has also maintained a shareholder-friendly approach, announcing a $3.5 billion share buyback program alongside consistent dividend growth, signaling confidence in its financial health. With over 500 branches across 23 states and assets exceeding $200 billion, First Citizens has cemented itself as a major player in the U.S. financial sector. These investment moves by members of Congress offer a glimpse into sectors they find promising. However, it's essential to conduct thorough research and consider your financial goals before making any investment decisions. Representative Byron Donalds has recently added GoDaddy Inc. to his investment portfolio. Headquartered in Tempe, Arizona, GoDaddy is a prominent provider of internet services, specializing in domain registration, web hosting, and website building solutions. Serving over 20 million customers worldwide, the company has expanded its offerings to include e-commerce, digital marketing, and business management solutions, enabling businesses and individuals to establish and enhance their online presence. Financially, GoDaddy has demonstrated robust performance. As of March, the company's stock price is around $176, with a market capitalization of $24.4 billion. The company's revenue for 2024 was $4.57 billion, marking a 7.5% increase compared to the previous year. Analysts have shown confidence in GoDaddy's future growth, consistently revising earnings estimates upward. The company's year-over-year cash flow growth has been impressive, outpacing many of its peers, highlighting its financial health and operational efficiency. GoDaddy also benefits from a high customer retention rate, with approximately 85% of users remaining loyal over the long term, ensuring stable revenue streams. Notably, nearly half of its customers are international, indicating a broadening market reach that could drive future expansion. On the Democratic side, Representative Josh Gottheimer has shown interest in 3M Company, a diversified global conglomerate renowned for its innovation across industrial, consumer, and healthcare products. Based in Maplewood, Minnesota, 3M produces a wide array of products including adhesives, abrasives, personal protective equipment, and healthcare solutions. Some of its most recognized brands include Post-it notes, Scotch tape, and N95 respirators. Despite facing legal and environmental challenges in the past, 3M has recently shown signs of a turnaround. In early 2025, the company's stock rallied 18% after surpassing fourth-quarter earnings expectations, suggesting a recovery from its post-pandemic struggles. The firm's investment in research and development continues to yield results, with new product launches gaining market traction, particularly in the transportation and electronics sectors. With major legal settlements resolved in 2024, including lawsuits related to earplugs and PFAS chemicals, 3M has cleared significant hurdles that were clouding investor confidence. Additionally, the company's long history of dividend growth remains intact, offering a solid yield of around 1.99%, making it attractive to income-focused investors. Despite its recent rally, analysts still see 3M as undervalued, presenting potential opportunities for long-term investors. Ever wondered if Abbott Laboratories is a smart investment right now? Let's break down what you need to know about this healthcare giant and whether it's a stock worth your attention. Abbott Laboratories, ticker symbol ABT, is a global healthcare company headquartered in Abbott Park, Illinois. Founded way back in 1888, Abbott has grown into a major player in medical devices, diagnostics, nutrition products, and branded generic medicines. With approximately 114,000 employees, Abbott now operates in over 160 countries. In 2024, the company reported a solid $42 billion in sales. Impressive numbers for a company with such a wide global reach. But before you rush to buy, let's look at some key concerns that could impact Abbott's future performance. First up are Abbott's legal troubles. The company is still dealing with the fallout from its 2022 baby formula recall. This incident resulted in a $495 million settlement linked to a premature infant injury case, and that's just one of dozens of pending lawsuits still looming. These legal risks could drain Abbott's cash reserves and potentially harm the company's reputation long-term, making it a factor investors should watch closely. Next is the competitive threat in the continuous glucose monitoring market. Abbott's Freestyle Libre currently dominates this space, but rival Dexcom is pushing hard with aggressive innovation. While Abbott has roughly 6 million users worldwide, that's just a fraction of the 500 million people globally living with diabetes. If Dexcom undercuts pricing or launches next-generation devices with improved features, Abbott's growth in this crucial sector could face major challenges. Then there's Abbott's diagnostics segment, which is facing a post-pandemic reality check. In the fourth quarter of 2024, Abbott reported a 0.6% decline in diagnostic sales compared to the previous year. This dip largely stems from plummeting COVID-19 testing demand. Although Abbott's organic growth outside COVID-related products still looks solid, that revenue gap may take time to fill as new products ramp up. Now let's talk about valuation. Abbott is often seen as a dividend darling, with a long history of paying consistent dividends. But with a dividend yield of just 1.8% and a price-to-earnings ratio higher than industry peers like Johnson & Johnson, some analysts argue that Abbott's stock trades at a premium. Adding to this concern, Abbott's projected 2025 revenue growth is forecasted at just 6.97%, trailing behind the broader medical device industry's average growth rate of 9.16%. That slower growth raises questions about whether Abbott's current valuation is justified. Lastly, Abbott's 2025 guidance shows solid organic sales growth of 7.5% to 8.5%, which is encouraging. However, its adjusted EPS forecast of $5.05 to $5.25 barely meets analyst expectations of $5.16. With Abbott's stock already up 7% year-over-year, there's little room for error. Any delays in research and development or unexpected regulatory issues could easily trigger a sell-off. So, while Abbott Laboratories is a powerful player in healthcare with diverse revenue streams and a strong global presence, its legal risks, competitive pressures, and modest growth forecasts suggest that caution is warranted. Keeping an eye on how the company handles these challenges will be key for anyone considering investing in Abbott in the near future. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.